Ladies and gentlemen, welcome to this webinar today. I hope everyone has a great time so far. My name is Theo, for those who see me for first time, and Paul join us right now. Hello, Paul. How are you?
Hello, Theo. I'm very well, thank you. And yourself?
I'm very well, thank you. Just started the webinar now, so allow me to just for a few minutes to go through some important channels. So guys, please make sure you engage yourself with the Telegram. At least you can have access and read the posts or the comments. Some traders, myself, you can do as well under the live trading every day. If you have anything you want to ask, like there are comments here, but on the desktop version, it's not visible. But when you download the application on your phone, it's visible. You can read all the comments here. Also, we have comments on pretty much on the recent live webinars. We do have comments from traders and from myself. And it's a great tool now to use. Then we have the Admirals Instagram page. On a daily basis, you find content here. Please make sure you follow us. And of course, the YouTube channel. We put everything here, live webinars, recording webinars like this one here. On a trading spotlight, you can find all Paul's price action series. And we see that they've been engaged by all of you guys, and we are very, very happy and excited from your support, because we understand that this adds value to your trading. It helps you to become more experienced trader, to understand how to implement the price action. And Paul, it's trading for decades. He's the right person to put all this content in front of you. And from your feedback as well, we know that you do appreciate. And for me, you are very lucky to have Paul explain you and teaching you how to trade the price action in all time frames, right, Paul?
Absolutely. That's very kind of you, Theo. Those kind words. Thank you.
Thank you so much. Just allow me for a sec to share the screen so you can start. Can you try now?
I will indeed. Let's bring my up here.
Okay, perfect. Thank you so much and good luck.
Thank you, Theo. Thank you. Thank you. Good afternoon, everybody. Great to have you here. I hope you can hear me, hope you can see me, hope you can see the slides we have today for the next installment in our Ultimate Price Action Trading Guide. We're up to session 19 already, ladies and gentlemen. And today we're going to be talking about grading our setups, effectively just looking at grading our trading in an effort to improve our trading over time. So as I said, we're up to session 19 today, but you will find all the previous sessions. They are available on the Admirals YouTube channel there, as my colleague Theo showed to you there. So they are all there. You can actually go through them to your heart's content, okay, in your own time. If you've missed a couple, or if you want to recover a couple of the items that we have discussed, every week we're doing a session on here, okay. It's going to be, as I keep saying, a bit of mix of like the sort of hard skills and the soft skills of trading, but centered around us being able to trade price action, and we'll do more of that later on in this particular session. So before we start, okay, we appreciate that here at Admirals, we this is the English speaking webinar, but we realize that we're going out to a truly global audience. It's absolutely fabulous to have you here wherever you are in the world, okay. We at Admirals here, we hope you're having a good start to the year and enjoying these eventful markets, and we look forward to having your company for our sessions here for the rest of 2023. I also appreciate that there is a broad range of experience for our people who join our sessions, from people who are completely beginning at the start of their trading journey to those who've been trading for many years. You are all very, very welcome. There is always something for everybody. Today's session is probably sort of, it focuses a little bit on stuff that, intermediate and advanced traders should be doing. And it's an element of complete beginners, complete new traders may not realize exactly how important it is yet because they're still learning the skills of how to engage with markets. But I can assure you, ladies and gentlemen, part of it is about helping you set the right routines, the right habits right from the start of your trading journey in an effort to help you become the best possible trader that you can be, which is certainly what my aim is for these sessions here with Admirals on a Wednesday afternoon. So remember, we are Admirals, all right, Forex and CFD broker, okay, with global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, allowing you to engage with markets using both the MT4 and MT5 platforms. If you have any questions about Admirals, please get in touch with your account representative. They'll be very happy to help guide you. So what should we talk about today? Well, not unsurprisingly, for those of you joining us for the first time or you're complete beginners to trading, okay, just starting out, we'll do a slide or two on what price action trading is for those of you who are just learning it. But as I said, today we're going to be talking about grading our setups as a trader, okay, grading our trades. And we'll talk about why it's important for traders to grade their setups. It is about basically how traders set themselves up successfully in an effort to basically grade their trades in order to help them, and how it could potentially improve our trading. And that's, as I said, that's what we want. And if there's time at the end, we'll have a little look at the live markets. There's one or two things that I'd like to be able to sort of try and point out to you, just, based upon what we talked about last week in terms of weekly charts, but also in terms of just, price action that has been occurring over the last few days. So be sure to stay with us till the end and we'll try and cover that and we'll do as much as we can. But before we sort of dig into our session, it will be interesting to know from those of you joining us here, and as I said, I appreciate we always have a broad range of experience. How many of you actually grade your trades at the moment? How many of you actually do that? It'd be interesting to know, what, if any, sort of, grading and review you do of your tradings and your setups, etc., in an effort to help manage and improve your trading performance. So, if you're already doing it, or you haven't been doing it, or you've never even heard of it, just put that in the chat box, put what your thoughts and comments are there, okay, and we'll be able to sort of work with that as we go through our session here today. So it's Mont says, hi Paul, I've been watching all the episodes from 02 to 17, but I'm not able to find the first episode. Could you please share the link to the first episode? Thanks for the feedback. It certainly should be on there. What I will do though is we'll get our lovely assistants here, okay, at Admirals. They'll be able to just make sure that it goes on there, okay, and that it's definitely on there. It should all be there, certainly from like 1 to 18 so far. But I will ensure that I'll speak to somebody and make sure that it is there for you, okay. But thank you for that feedback. I appreciate it. And as you've watched from 2 to 17. I hope you found it helpful and useful in terms of your own in terms of your own progress. David says, I review each trade, the good, the bad, and the ugly. That's what I like to hear, David. Okay, that's the way to do your trading, right? Review each trade, the good, the bad, and the ugly. All right, it's the way we learn as traders. But we will touch on that more in that. But thank you for your insight there, David. So for those who don't know me, my name's Paul. I've traded for many years, traded for funds, traded for clients. Primarily, I like to focus on FX, indices, and commodities. For my longer term trading, I tend to focus more on trends. That's what I like to try and catch. And my shorter intraday trading, I tend to be a reversal trader. That's the way that I have found out that works best for myself. And I'll be sharing with you my own experiences and insights over the years. As David said, I'll be sharing the good, the bad, and the ugly. All right, because I would hope that I will be able to demonstrate to you what good practice is. But if you're smart, you'll also learn from some of the mistakes that I made on my own journey. Okay, and I made plenty. Anybody who says that they don't, all right, hasn't traded for very long. All right, it's part of the process, part of the journey. It's part of it. Embracing any new skill. Right, when you learn any new skill, any new task, anything that you set your mind to achieving, you're going to have knockbacks, you're going to have obstacles, you're going to have failures along the way. that goes for everybody. Nobody escapes that, okay? And if anybody tries to tell you that they don't, they've never had any setbacks, well, then they've probably not really been trading, okay? It is part of the journey, and it is actually about how you respond to those setbacks can actually help sort of define how quickly you evolve to your next level as a trader. And as I said, through these sessions, I share some of my own mistakes, okay? Because smart people always try and learn from other people's mistakes, all right? So there you go. I will be sharing them as we go through, not only today, but all the sessions we have planned for the future. So price action trading, it is, as I said, we're going to continue this series every Wednesday afternoons, all right, and talk about helping traders understand and utilize price action in their own traders. And part of the reason is we understand that sometimes, for beginner traders, it's easy to be intimidated by the amount of knowledge required to be able to analyze markets, and also just being able to understand the massive amount of resources that are out there for traders these days. Thanks to the internet, it can sometimes just be a little overwhelming to try and understand what is the best way to operate and engage with markets. But, what we're talking about here is that just a little bit of education and a little bit of understanding how candlesticks are formed, all right, how price action plays out and what it's telling us, then it becomes easier to analyze and understand markets for ourselves. So each Wednesday, we're going to, each session will build upon the previous session so that you're educated and informed how best to use price action in your own trading. And as I said, the previous sessions are all there available, and make sure they will all be there and available on the Admirals YouTube channel and Admirals Facebook channel, and by all means, okay, don't, if you've missed one or two, by all means, go and see. If there's one or two of the pieces that maybe you needed to recover, they're all there, okay? You can just go through them, okay, and just make sure you solidify your learning from these sessions so that, you are educated to make the best trading choices that you can. So, for those of you joining us for the first time, and I appreciate there are always people at the start of their journey, and what I would say to those people is that everybody was once there, even myself, okay, even Theo, okay, all of us there at one point were at the start of our trading journey. So please don't feel that you're out of your league, or you may be out of your depth. These sessions are all about being able to help. All right, about being able to help sort of, just as I say, raise your level of education, raise your level of understanding, and give you a little bit of insight, okay, into how markets work through the prism of price action trading. Because price action trading, really, it's just a basic means of market analysis using price movement over time. And it is popular with both retail and institutional traders. And what we're looking to do is, as the name implies, we're analyzing the change in prices over time. That is the action. And whilst price action, okay, and understanding how to trade using price action is popular with retail and institutional, it's also popular across all time frames and all instruments. Although we will primarily look to mostly focus on the kind of the longer term time frames. And the reason for that is, I do understand and recognize that an awful lot of people here who join us for our sessions, they are trading as a second job, as a second income, as a kind of a new hobby, or a new sort of new side hustle, a new kind of future business. So they may wish to trade all the time, but just lifestyle commitments, work, businesses, family, etc. Just may not allow them to do that. And so by being able to sort of look at the longer term trading, well, then you're able to sort of look at how to trade, just doing a little bit of time at the weekends, or just a little bit of time each day, just doing your analysis and looking for trades on the longer term time frame. So we will focus mostly on those longer term time frames, but good price action trading is valid across all instruments at all time frames. Okay, and once you've learned this skill, think of it like learning a new language. Well, then you can apply it elsewhere, right? But like learning any new language, you've got to practice. Okay, there are no magic beans that I can sell you. Okay, there's no magic potion you can drink, or a magic salve you can rub yourself down in that immediately sort of switches you into the world's best price action trader. I wish there was, but there isn't, ladies and gentlemen. What it comes from is just doing a bit of work, all right, every day. Just work a practicing, getting better at it, doing your analysis, utilizing it to identify trade setups and operating in that direction and in that way. So, we've covered an awful lot over these sessions so far. There's plenty more for us to talk about. And what I've said is that every week is that, I'm looking at both the hard skills and the soft skills of trading. So the hard skills are things like identifying trade setups, which we've done plenty of sessions on, things like engulfing candles, star formations, key reversals, pin bars, inside bars, all right, star formations, false breakouts, all of those of what people might see as, the hard skills, all right, of actually just looking and taking a trade. What I've also wanted to do is add in some of the soft skills, all right? Soft skills about understanding the importance of routines, about preparing yourself for, the opportunity in markets, about understanding the importance of a trade plan, building your own particular trading plan, how to effectively, combine setups, combine work, etc. that we've seen. So the whole idea is that, you are getting a trading education. And whilst new traders might not necessarily fully understand the importance of soft skills, I can assure you that the longer your trading goes on, the more prevalent, more important those soft skills become. And today's session is one of those things about grading your trade setups, all right, looking at that. At first look, for a completely new trader, they might say, well, what's the point in that? Why does that? How can that help me? That's just, it's just taking up time and energy I could put on, finding my next trade. But what you'll find is by creating that feedback loop, by basically understanding your own trading better, it allows you to effectively start to cut out the kind of sloppy, impulsive trading and start to reveal and focus on, what are your particular best setups, what's your particular best instruments, what's your best timeframes, so that you can focus your time, energy, and resources into avenues that are more likely to suit you. So, we'll touch on that, but if you remember, what we've covered is about, talking about having good routines, right? Good routines, all right? Good routines which become good habits, and that's what we want to, as a new trader, have a simple routine that allows us to sort of just become a good habit, which becomes almost like automatic response to what we're looking at and seeing. And you remember what we talked about was, we talked about having sort of 10 steps, but the first sort of 5 steps were quite simple, namely that whenever you open a chart, all right, whatever it is, okay, it doesn't matter if it's gold, if it's Bitcoin, if it's NASDAQ, it doesn't matter. First thing you do is you define your levels of support and resistance on that chart. Start at the monthly, go down to the weekly, down to the daily. Draw in significant levels of support and resistance, horizontal levels of support and resistance that you can see, areas where the market has reacted. Drawing in things like trend lines where they are valid. Drawing in things like big round numbers, okay, big treble zero numbers, they will become important. Because after that, we can move on to step 2, is to define if there is a trend, right? Is there a trend, okay, in that particular instrument? What we have to realize is that, good trends leap off the chart at you. You don't need to force them, okay? A good trend will leap off the chart at you. But you just have to remember, most instruments only trend 20 to 30% of the time. So most of the time, they're either consolidating, going sideways, or in transition, right? So if it isn't in a clear trend, leave it, move on. Because actually what we're looking to do at step 3 is we're looking to see, well, how does price react at those key support resistance levels? Might be a horizontal level of support resistance, might be a big round number, might be a dynamic level of support resistance, namely a moving average, okay? You'll find on my charts at the 20 to 50 to 200, they can act as dynamic levels of support and resistance. Because step 4 means we're looking for price action triggers at those areas, all right? Because in an uptrend, we want to be buying at support. At a downtrend, we want to be selling at resistance. And if we're seeing price action triggers, like things like we've covered, engulfing candles, pin bars, star formations, inside bars, etc., things like that, okay, that is what can give us a trigger. But what we can also look at is it part, step 5, is it part of a bigger chart pattern? Is it part of it? Things like a nice flag pattern, okay, for a continuation pattern. Maybe it's a triangle, or maybe it's the end of a trend, okay. Maybe there's a head and shoulders pattern, or a double top, or a triple top, etc. Just look at, is it part of a bigger chart pattern? Now, what I do is, because for new traders, just get into a routine of doing that, okay. It's not perfect, okay? It's, you know, but it's the start of a framework. It's the start of a framework you can work with in an effort to help make sure that you're doing the right thing every time, and that, you know, you're basically building good habits in your trading, which will become more and more important. And as I said, you know, what we're going to be doing, and as we go into it and look more into it, you know, what we will be focusing on is we'll be focusing on mostly 28 major FX pairs, the dollar index, and then the majors and how they basically trade against each other. Also the major indices, okay, so things like the major American indices in Europe here, the FTSE, the DAX, okay, and over in Asia, things like the Nikkei and the Aussie 200, the ASX, okay, all of which are available on the Admirals platforms. We'll look at commodities. Okay, commodities are of interest at the moment, things like energy, oil, and then gold, silver, etc. We'll look at some of the major equities, some of the big US tech stocks, which are very widely traded, you know, and even things like, you know, crypto. Okay, because as I said, price action, being able to understand and work with price action, okay, works across all time frames and all instruments. And as I said, if you can get a good base, right, good base knowledge, good habits and routines in place, what you'll find is that's a great starter education. Yes, you will probably focus in particular areas that suit you better, but you know, if you have that ability at the beginning, then that's a great starting place, right, for your trading career. So let's talk a little bit about grading trade setups and where it comes from and why we're interested in it. So, you know, it's interesting that, you know, in fact, this very morning working with a client of mine, okay, was, you know, about talking about how, you know, in the first thing in the morning, switching on their computers and basically just, you know, starting to see the markets moving fast, and then basically, you know, almost getting drawn in to taking trades as quickly as they open the chart because things are moving, things are getting excited. There's lots of pings going on, okay, and there's lots of sort of, you know, candles going left, right, and center. But the thing about that is that when you know when you see a market like that, invariably it becomes very easy, all right, to ditch your rules, all right, and to sort of fall back on, you know, sort of impulsive knee-jerk reactions, right, and you know, taking trades where you end up chasing the market rather than letting the market come to you. And what I try to get across to traders is, you know, that's not really a long-term successfully way to operate. What we need to do is we need to think of it, flip it the other way, okay? And then rather than chasing markets, what we want to be doing is we actually want to be attracting the better trades to us, all right? You know, what I tell people lightheartedly is that, you know, anything you chase in life, whether it be, you know, money, opportunity, partners, etc., you know, the more you chase them, the more the faster they tend to run away. All right, you know, and trading's the same. Okay, if you chase markets, it'll tend to run away from you, or it'll change direction on you in a heartbeat. And actually, what we want to do is to get in a position to be where we're attracting good trades to us. Okay, where we're letting good trades come to us. And part of that comes from us being able to analyze a market and identify areas, levels, zone, places where the market's going to have to make a decision. And, you know, market's likely to make a decision, and that is the place where we can almost like sit and wait, almost like an ambush, sitting and waiting, you know, in kind of particular area and zones, getting ready to take our trade based upon, you know, what the market does at those particular areas and spaces. So instead of becoming like a trader, you're more like a profit planner. Okay, you are planning for profit, and that's what we kind of want to get the mindset across, is that you think about it in those terms. So, you know, what we say is, you know, don't start your day by just opening charts and just looking for the quickest trade that come to you. All right, you'll hear me talk in later sessions, and in fact, you know, we talked about it in one or two of the early sessions about the importance of having a routine, about preparing for opportunity, getting yourself ready for your trading session. You know, it's not about really sort of, you know, if the German markets are opening there at sort of 8 o'clock European time, okay, it's not really about sort of rolling out of bed at 5 to 8, okay, in a dressing gown, and then just, you know, flipping up the laptop and getting stuck in. You can do that, but actually that's not really a very professional way to operate, all right? You know, you need to basically prepare yourself to engage with markets and to do it from the best place possible. So, you know, one of the things you can do is don't start your day by opening your charts and just looking for a quick trade, all right? That's not the way smart professional traders are looking to operate. what you want to do, and this is one of the reasons we talked last week about, weekly charts, is, you can do your analysis of the market, you can do your technical analysis, you can, look at the price action. You can do that at a weekend, okay, when the markets are closed and there's no distractions, or you do that maybe at the night, okay, or in the morning before you go out to your work or at the end of your day, and you do your analysis and then start to identify your trades, okay, start planning profit opportunities, areas where, there might be the opportunity for you to put a trade on in the future, or where we're starting to see that step forward, those price action triggers are showing up, okay, on your charts, showing us, where there is a higher probability of market moving over the next session or so. And so, as I said, we're looking to become a profiteer. That ultimately, remember, ladies and gentlemen, this is a business, right? And you want to run it like a business, and like any good business, you want to focus on, that business generating profits for you. And what I tend to find is, if you're planning for profits, that tends to be a much better place than operating. Okay, and this is about, don't be guessing, don't just trade for the sake of trading. Wait, have a little bit of patience. Now, I appreciate it's very easy for me to sit here and say, just be patient. Okay, that's easy to say. The reality is, well, actually, what does that mean, Paul? Well, that means that, it's easy to be patient if you know what you're looking for. Okay, if you know which setups are your preferred setups. And the way you know that is by keeping good records and starting to finalize in on that, which we're going to talk about. But what we want to do is, as I said, treat this like a business. If you want fun and excitement, well, get yourself a PlayStation, ladies and gentlemen. All right, okay. I know some people like to trade as a hobby, all right, and like to just have a little play on the markets, and those people are perfectly welcome to do that, okay. But if you're going to want to make trading, whether it be a secondary source of income or your primary source, or a career for yourself, well, then basically, you need to treat it like a business, okay. And as I said, that's about doing your analysis and planning for your trade more so than just flipping open the screens or switching on your trading computer and chasing, the sort of, the fastest moving market that day. And if you don't believe me, well, you can believe this guy, Jesse Livermore. Okay, he wrote one of the seminal books on trading, Reminiscences of a Stock Operator. If you haven't read it, by all means do so. I think the book's getting nearly towards 100 years old, okay? And whilst, trading, right, in terms of the way we go about it may have changed, humans haven't changed that much, all right? And the stories and the education that he provides you, is as relevant then as it is now, all right? And as Jesse says, after spending years in Wall Street making and losing millions of dollars, I want to tell you this. It was never my thinking that made the big money for me. It always was my sitting. And what he means by that is about being sitting and waiting for the right trade, okay, in terms of understanding what he's looking for. And then once he's in a trade, being able to sit with that trade and let it play out, okay, let it play out, all right, rather than just chasing trades, okay, closing trades too quickly, okay, if there's a little bit of profit, or letting trades run on too long if they're not working for you. So do yourself a favor, read Reminiscences of a Stock Operator. It's a great book to read and it'll help you a great deal. But what I found in my own trading and what I found in I've seen other traders is that when you start thinking of yourself as like a profit planner, when you logically plan your trade opportunities, profit opportunities, what happens is you tend to make less stupid trades, okay? Stupid, impulsive, knee-jerk reaction trades. You have more control of your trades. You can't control the market, okay? Some people might think they can, but the reality is you can't control the market, but you can always control your position, all right? You can always control your position. And that is a good place to be at, okay? This is your business. You want to be managing that. What happens is, when you start doing that, you start to develop consistency in your trading, which means you become more confident as a trader, and your experiences makes you a better trader, okay, as you go forward in your trading career. So it's all of these things are I've just seen and found and work very well. So Darshan says, I'm often letting a good one run, often close my trades prematurely instead of adding to runners at the right times. That's good feedback there, Darshan. Okay, and stuff. Yeah, you're absolutely right. Is that good traders, and we'll touch on it in a future session, is they are letting their trades run And if possible, they're looking to add to their trades to build a position. And that's something we'll be talking about in a future session. Ebenezer from Ghana says he's here and it's a pleasure to meet you all. It's a pleasure to have you here as well, Ebenezer. I hope you're enjoying it and taking on board some of what we're talking about today. So another great quote here from Dr. Alexander Elder, who has been doing webinar presentations for Admirals. Okay, if you know, make sure you sign up for those. If you've not seen the others, once again, they'll be on the Admirals YouTube channel. He wrote several good books, but one of the ones I enjoyed myself was Coming to My Trading Room. And what he says there, a great quote: "Show me a trader with good records, and I'll show you a good trader." And in all my years of trading for myself, working on trading floors, you know, mentoring traders, okay, I 100% back this, okay, 100% back this. Show me a trader with good records and I'll show you a good trader. It's absolutely spot on. And that kind of leads us in towards, you know, what we want to talk about in terms of grading our trading. So if you think about our scene, all right, our scene for our, you know, with starting our trading day, you know, what we should be doing is we should be conducting our pre-market routine. That might be a little bit different for everybody. As I said earlier, it's not about rolling out of bed 5 minutes before the market opens in your dressing gown and then hoping you can just, you know, perform at your very, very best. You will have a pre-market routine, and we did a bit on that in one or two of the earlier sessions, which you can find. Another thing is, you know, we've actually decided to trade, okay? We've actually identified that we are in our ideal trading state. Now, that's a bit more of an advanced element, which we'll talk about in the future. We developed our trade plan for the session, okay? We've done a little bit of our analysis, worked out, okay? We've worked that out. We've, you know, had a little trade plan going into that session. We've then traded our plan. Remember, plan your trade, trade your plan. Well then, you know, once you've done that for your session, you know, what do you do next? Well, what comes next is recording your trades and reviewing them, okay? And this is what, you know, part of it is what helps make okay traders great traders. I truly believe that. So you should be keeping at least 3 types of records for your trading, okay? You should have you know, an Excel spreadsheet, a trade journal itself, and then also an equity curve. And as part of the spreadsheet and the journal, you know, you should have a grade card, okay, which is what we're going to talk about, you know, today. All right, said it's so I think Darshan says one market wizard said he corrected someone who stated one cannot go broke taking profits. The wizard said he has seen plenty going broke doing just that, closing great trades early and freezing when the traders going against them and not having a plan to cut off. Yep, that's absolutely right. Okay, people generally, human beings, they will snatch at profits too quickly and let losing trades run far too long. Okay, and it's the disposition effect is the exact opposite. Okay, good traders have, you know, score highly on the disposition effect because they will cut their losses very quickly but let their winning trades run. Okay, and that's the way you have to do it. Now, admittedly, that is easier said than done, but it is easier to achieve if you have a nice simple trading plan that helps and you're keeping good records of your trades, so you start to work out which are the trades that suit for you best. So as I said, you should be keeping a spreadsheet, a journal, an equity curve, and also, you know, looking at a grade card. So, you know, that's an old Excel spreadsheet, but you know, you can make one of yourselves. Okay, so it should have the details as, you know, the date, okay, that you traded, the day, because especially as an intraday trader, you might sort of review and realize that you trade better some days other than others. I tend not to trade well on Fridays and Wednesdays. Okay, that's me. Okay, and that's just come from years of experience. TFV versus Rev, right? Is it a trend following trade or was it a reversal trade? What was the strategy that you employed? What was the time scale? Okay, what was the time scale that you executed on, and what was your outlook? Right? You know, was this supposed to be a scalp? Was it an intraday trade? Was it a swing trade? Was it a position trade? What were the outcomes? And then also starting to put in things like what were my performance, my execution, and my confidence grades, which is what we're going to talk about. So, you know, you can build your own Excel spreadsheet. Okay, there are a plethora these days, okay, of ones that you can download. There are even professional ones that, you know, you may wish to purchase. I'm not really too fussed on how you do it, as long as you are doing it. Okay, as long as you are doing it. All right. Now you'll find that on your, you know, MT5 and MT4 platform, they will actually keep, you know, the records of your trades. But remember, it's not necessarily your broker's job to keep the records of your trades. Okay, they are your trades. It is your job to keep on top of that. And I think actually having to input the data in yourself can and actually help make you just be part of the debriefing process. And as long as you're capturing all of that kind of data to begin with, as you go deeper, there's more data we can work with. But as a starting point, if you deepen that as an Excel spreadsheet, well, it will start to give you insight into, what you're how your trading's going. And then when we get to a point of reviewing it, you start to get a little bit more focused on what works best for yourself. Most importantly, and something that I see, well, certainly when I started, nobody did, but more people are doing, but there's still always room for improvement, is that you should have a grade card for your trade. Okay. And I like to grade performance, execution, and confidence. This is what I'm looking for. Okay. So my performance scoring is about, okay, you can see there, scoring out of 5. Every trade, I put it in that spreadsheet. Okay. What is, scoring from 1 to 5. So score 5 on my performance is that, my target was hit, my predetermined target for my trade was hit, or on the other side, stop, 1 was that actually my stop was hit. Okay, so the trade played out for me. And every trade, you can read there, 4 is out at a different price from the target but profitable, out at break even for 3, or 2 out at a different price from stop but a losing trade. So each trade, okay, on that, I'm just filling that data in. More importantly, okay, and this is, I can't stress this enough, more importantly is the execution. Okay, execution of my trade plan. And I score 5 if I follow the trade as dictated in my trade plan. Okay, so I wasn't just switching on the computer and chasing the market. Okay, I had my plan. Okay, I had my standard trade setup, and I was planning my trade, trading my plan, manage my risk. That scores me a 5, and that's what I'm always aiming for. Always aiming to score 5 on my execution, because performance, well, once a trade is triggered, a market can go anywhere. It could, it could sort of, it could do anything regardless of how good the setup is. But I'm in control of the execution, always in control of it. Okay, so I score 5 if I followed my trade plan as dictated my plan, or I'm scoring 1 if it's an impulse trade. Okay, if it's a knee jerk, you're just basically being complacent or sloppy and just taking an impulsive trade. That never works well. Okay, and as I said, I'm always targeting myself, holding myself to a standard of looking to score 5 on my execution. What I also want to do is, the second part of that is track and rate my performance of my trades, also based on confidence. All right, how confident was I in the trade setup? So, trade 5, okay, if I score 5 on my confidence scoring, it's because I'm fully backing this trade. I'm all on board this trade. My feet are taped to the pedals on this. It's met my trade setup. It's in my plan. Everything's lined up. Okay, I'm completely bang. I'm on board with this trade. And then the other end of the spectrum, I score a 1 if I'm resisting taking the trade. Okay. All right, I don't want to take the trade. All right, it meets my trade plan rules, but I'm really resisting taking the trade. There's something within me that is resisting, don't want to take it. Maybe it's fear, maybe it's grade, maybe it's developing intuition. We don't know, just off the back of one trade. But if I'm feeling like that, I score that. Okay, and you can see that basically, I score 3 if my confidence when that trade was being taken was that it was 3. Not sure about the setup. Could really go either way. Why am I interested in taking this? Well, once again, once you get enough data and feed it back, well, then you can start to see trends in your own trading. And sometimes what I find for some traders is that actually the trades that they were completely 100% confident in were not the best trades, but the trades that they were really, struggling to take, that they really were almost like scared or fearful to take, with a trade that actually performed best for them. Not for everybody, but it's just a phenomenon that I've seen happen, a good few times with traders. And so by tracking all of these, by grading your trades for performance, for execution, and for confidence, after 20 trades, 50, 100, 200 trades, you start to get, some fascinating insights into your own trading style. Okay, you start to work out, which are the trades that really work for you, not the ones you think, but the actual really ones, based upon just a little bit of, your scoring matrix, understanding your performance, your execution, and your confidence. these things can become, enormously important. What you should also do, so that was your spreadsheet, you should also fill out a trade journal, okay? Fill one in for every trade, all right? And capture all the trade details, but also write down, what you felt about that trade, all right? What you felt about that trade. Were you feeling really confident about it? Or were you feeling, really sort of underconfident? Were you feeling a little bit fearful about it? Or were you just, absolutely so overwhelmed that, you're feeling greedy, you want to like treble your position size, exactly. Keep all of that, write it down. And most importantly, what did you learn from that trade? Challenge yourself to write down 3 things I learned from each trade, okay? Challenge yourself. What you'll find is that, once you've been doing that for 20, 50, 100 trades, I guarantee you'll start to see recurring themes, okay? You will start to see some recurring themes, which will start to give you an idea on what you need to work on developing. In the same way that we look at trends in markets, you're also looking at trends in your own trading as well, okay? Trends in yourself. And it becomes fascinating once you start to get enough data to understand a little bit more about how you look to trade. So I think Darshan mentioned New Market Wizards, another couple of fabulous books there, okay? One of them ones from the first one of my own personal favorites was a guy called Tom Basso. And a great quote, which I have on my own trade journal to remind me, is he says, every time I take a loss, I need to learn something from the experience and view the loss as tuition at the College of Trading. As long as you learn something from a loss, it's not really a loss. I stopped looking at losses as problems and started viewing them as opportunity to elevate myself to the next plateau. There's are 2 great quotes there from Tom Basso there, okay? He's been in New Market Wizards, very successful trader, writes, a good blog and stuff you can follow, but he's absolutely right, okay? You're going to have losses as a trader. Everybody does. It's how you view those losses and how you utilize that data, okay? Utilizing it, getting as much value out of it as you can to help, elevate you, all right, and help you evolve to your next level as a trader. And that is something that anybody can do, okay? It doesn't matter whether you've been trading for 2 days or 2 decades, okay? That is about your attitude and the way you conduct yourself in markets, and that's what we're particularly interested in. So before we switch across the live charts, just in conclusion, price action analysis is a way of analyzing market using purely price action. No surprise there. We're looking for price action triggers at significant price levels, prices or zones, and that allows us all to build a very simple price action trading plan. But we also have to remember that trading is a performance activity, and it helps us to improve our performance when we keep records and then review them. One of the simplest and best ways is for you to grade every single one of your trades. Grade it for how you performed, grade it for how you executed, and grade it for what your confidence was with that trade. By doing that and starting to build up, a sample size of trades, you will learn a lot about your trading, okay? And you'll learn a lot about yourself, the good, the bad, and the ugly, as David said earlier, okay? And that's fine. It's just data. It's how you can look at it and interpret it, and you can utilize that to effectively to get rid of the rubbish trading, okay, and focus more on just the trades that work well for you. So we've got a couple of minutes. I just wanted to have a little quick look at something on the live charts for us, okay, just whilst we're here. So so we will look at that. Darshan, I would do, but we're a little bit pushed for time, unfortunately, and stuff. This one, but as I said, this record is being recorded and will be on the YouTube channel, and you can have a look at that. Before I switch across to the charts, just remember, don't forget to join us next time. So same time, Wednesday, 15th of February. So actually, we're going to be talking about is how to add to our trades to build a position. Something, I think it might have been Darshan mentioned earlier about how do we do that. We're going to talk about why is it important to add to our trades, how can we do it best, and how can we use it to help improve our trading results. So, that's a hard skill. That's next Wednesday, 2 o'clock London time, Wednesday, 15th of February. I hope you'll join us, okay? Check your inbox for the webinar link. We'll go onto the website, okay, and register for that particular session. If you've got any questions or thoughts or comments or feedback, by all means, just, you can see there, drop an email, global@admiralmarkets.com. You can do that. And what we'll do is, I hope that's been useful. If you'll just bear with us for a moment, I'll just switch across the chart. We've got just a couple of minutes left, and we'll just try and just wanted to have a quick look at something, a phenomenon based upon what we talked about last week. So just bear with me one moment, and we'll switch across. he says. So let's bring this up. Let's bring this up very quickly here. Bosh. Excellent. All right. So last week we talked about weekly charts, and I talked about how doing a little bit of weekly analysis can help give you an opportunity to engage with the markets, all right, and an opportunity to do it on a much smaller time commitment, okay, in terms of you can just do your analysis a little bit of the week and then set your trades either on a Sunday night, depending on where you're in the world, or a Monday morning. And I just thought the start of this week gave us a good insight into that. We had on Friday, okay, last Friday we had big numbers coming out of the US. Okay, we had there's the FOMC meeting, there's NFP, and there's the ISM numbers, all of which made a difference to the dollar. And what we saw here, I'm just going to quickly draw this up here. Is bring up the old drawing tool here, Paul. Is that last week, okay, this is the weekly chart of the dollar index, which is what we've talked about, okay, and that, dollar index is, trading FX markets. You want to know what the dollar's doing because the dollar's the daddy, is the big boy, all right. Last week, okay, having been in quite a significant downtrend for the last couple of months, what we saw on the weekly chart was, we printed a weekly, what was an engulfing candle, what was a key reversal candle there on the weekly chart of the dollar. As I said, normally, if you're printing that, either the existing trend is over or it is close to the end. So that's something, to take note of. What actually helped us as well is, if I just look at it, is, at the same time it printed that on the dollar index, we saw, very similar setups across all of those other FX majors. So, what we saw here is, this is the euro against dollar here on the top right. What we printed there was, we printed a bear, we hit 110, and we printed a bearish, okay, rejection candle, pin bar, engulfing candle, key reversal candle there. That's what we saw there. Here, okay, on the Aussie against the US dollar, the week having been in an uptrend and hit the big round number of 70, what we saw was printed last week was a bearish engulfing candle, which was also a key reversal candle. It did the same, okay, on here on the Kiwi dollar against the US dollar there, that for last week, okay, that was a big bearish engulfing candle. On the US dollar against the Canadian dollar, where's my thing here? US dollar against Canadian dollar was, we printed, what is it? It's a bullish engulfing candle. It's not a key reversal, it's not really a rejection, okay, but it's still the range engulfed the preceding candle. On the pound against the US dollar, what we had was effectively, it was, became part of a big weekly bearish evening star formation. On the dollar against the Swiss franc, okay, what we printed was a big bullish, okay, pin bar candle, rejection candle, which was part of a double bottom there, okay, reversal pattern. Even the dollar against the Japanese yen, okay, what we printed was a bullish engulfing, a bullish key reversal candle. I would also call it a domino candle as well. So, across, not only did we have it on dollar index, but across the board, all right, across the board, okay, we saw all of those signals setting up, okay, a little bit of dollar strength coming back into the market. And that's what I was saying kind of the week before. It's very timely. There's that, don't underestimate the power of weekly charts. When you see, a big change like that, it's worth sitting up and taking notice of, because, the market could be shifting gears, it can be shifting its direction. We've had, a downtrend in the dollar for a couple of months after a fabulous 2022. Now we've got to look at, well, can it follow through on that? Can it follow through that? And if that is dollar strength coming in, that will have a knock-on impact, okay, against all of the other currencies, against the all the other major currencies trading against the US dollar, and even on, just to finish, even on, where have I got it here? Let's get even gold, okay. Remember, all of these things are connected. Right, we had, this is gold, and this is the weekly chart. We had been in a downtrend, which was ended, and we started the uptrend on that bullish key reversal, bit of price action there, and then we've been in a lovely trend up. And then what did we print last week? But we printed, that is a bearish engulfing candle, it's a bearish key reversal candle, okay. So this did the same on silver and a few of the other commodities, okay. So what we had was, there was clearly money flowing into the dollar on the sort of last Friday and into that, and that, as I said, that's significant, and that's price action at its finest when we see a concerted move, a correlated move across lots of instruments, lots, all on the same time frame. Okay, when that happens, doesn't happen very often. It's worth sitting up and taking notice, ladies and gentlemen. All right, and what we'll do is over the next week we'll follow how that plays out based upon using some of the sort of concepts and ideas that we have talked about in this session so far. So there you go, ladies and gentlemen. Apologies, we've run out of time. As always, time flies when you're having fun. I hope you found that useful. I hope that's giving you a little bit of insight into the importance of being planning your trades, the importance of keeping your records, and then being able to grade your trades. Okay, grading for performance, grading for execution, grading for confidence, and by being able to sort of create that data and start to build it up, starts to give you a fascinating insight into where you trade at your best and where perhaps you don't trade too well at all. Okay, and as I said, the bigger the data sample that you build, the more useful that will become to you. So as always, it just remains for me to say that I hope you have a fabulous trading week. Be sure to join us next week when we talk about how to turn a trade into a position, building positions. Okay, trade well, everybody, and I look forward to speaking to you soon. Trade well, everybody. Cheers.